Fundamental analysis is one of those topics usually overlooked, and here's why that's a mistake. Now, before we get into today's topic, I do need to add a disclaimer. None of the content is intended to provide personal financial advice. The information provided is factual and educational in nature for you to apply at your own discretion. You may wish to seek independent financial advice from a professional financial advisor pertaining to your specific situation. Hello, financial freedom seekers. Welcome back to the channel. If you're looking to understand the markets like a pro, you're in the right place. I'm James, and for over the last 10 years, I've helped investors navigate stocks, commodities, and crypto. Today, I wanted to touch on the topic of fundamental analysis and how this relates to investing. It's a topic a lot of investors simply gloss over when they press the buy button on company stock, and it can be fatal if you ignore it. One of the methods of undertaking fundamental analysis is looking at company reports to see what insights you can take from them. So let's look at an example. I pulled a copy of Afterpay's FY21 company report to analyze. I've included a link to the report in the description. Thankfully, Afterpay's report is a bit more engaging than what you typically find out there, and this is due to the audience that they're targeting. They start off with highlighting some impressive goals that they've met throughout the year and showing signs of growth. For example, they reached their sales target of 20 billion 12 months early and had a massive increase on the staff headcount. All of these are signals aimed at highlighting that the company is in a strong position and encouraging you to invest. They also talk about how they looked after their staff during COVID. Specifically calling this out in a company report is both unusual and impressive. Whilst the figures look good, it looks like they've had some challenges with the regulators in the past. In this particular example, they've had dealings with AUSTRAC, who are the Australian Transaction Reports and Analysis Centre. In 2020, Afterpay underwent an AUSTRAC investigation due to concerns about its compliance with Anti-Money Laundering and Counter-Terrorism Financing Act. It's these kinds of investigations that can have a dramatic impact on the share price. This also needs to be factored in despite the positive commentary throughout the report. Another thing to note is the company is actually making significant losses according to their financial reports and is not heading in the right direction. In 2021, they had losses after tax of almost $160 million. Whilst they're not profitable, they do have some awareness of the challenges ahead in their risk statement. Calling out a couple of examples, they know they need to grow their customer base as well as increase the usage of their product in order to be profitable. And they need to do all of this while fighting off the competition. We can also use AI to support us in our analysis. In this example, I uploaded Afterpay's company report into ChatGPT and asked it to provide 3 key findings from the report. It specifically called out the growth in customers, its expansion into North America and Europe, and its acquisition by Square. Now, whilst it's always recommended to check AI summaries, this is just another way to speed up the process so you can make decisions faster about the investment. So what does all of this mean? The company report is a treasure trove of information about how a company is doing, and whilst they typically have a positive spin, they do have to report accurate numbers. The company report is just one of many sources you should use before making a decision. This is just a small sample of fundamental analysis I undertake before committing to investing, and I hope that you found it useful. So what are your thoughts on Afterpay? Would you invest in them? I'd love to hear from you. Until next time, cheers.